Welcome to the Sirius report. This is Paul, and I'm very pleased to welcome back today Eric. I think most of you know who Eric is. We'll obviously put his contact details in the description. So, firstly, Eric, welcome back.
Well, thank you for having me on your show again, Paul.
Oh, it's a pleasure. And I thought, well, the sort of timing is quite interesting. I'm not one for getting too fixated on gold and silver prices. I think there's a far bigger story and far more important things developing now and into the future, but clearly today in spot terms, gold in dollar terms breached 4,000 for the first time, and silver in dollar terms is rapidly approaching breaching 50 and finally making an all-time high after, well, nearly 50 years. Well, not quite, but a very long time. So we thought it'd be good to get Eric back. It just so happens to coincide with that. So I guess, what are your sort of initial thoughts with regards to the discussion today? Anything you feel is going to be of interest and worth sharing with the audience?
Well, I think in the bigger picture, Paul, the physical gold rapidly being positioned by China and the Shanghai cooperative that you introduced to the wider audience in the West. I think you were the first one, and also the BRICS plus. I think the gold rapidly becoming a international collateral on that front is really interesting. But what is even more interesting, um, well, for what's happening right now, I guess, if you can call it that, because gold breaking out 4,000 is US dollars is interesting. But what is even more interesting is silver potentially breaking out of a 40-year cup and handle pattern, about $50 US dollars. And I find that really interesting. And the fact that, today I looked around and it looks like everybody wants physical silver. You have the young people in China. There was just a report from Shanghai that came out, said that investment grade silver in China, like the demand for it, went up 50% in recent months. I mean, that to me is humongous because remember, the first time I went on your show, Paul, remember what I said? I said, the Chinese people buying gold and silver, it's a savings, but they're not yet buying it as an investment. Now, we are seeing that changing right now. And I think once silver break about 50, it will even make more sense for the common, regular Chinese citizen to buy physical silver as an investment vehicle.
Yeah, and it's hugely significant, I think, in recent days, with the ways we've known China's been buying enormous amounts of silver for a number of years, on and off, maybe on and off for 2 decades, but particularly in the last 4 or 5 years. And then there was kind of announcements where state-owned companies were saying, well, we've got 10,000 tons, and another one, we've got 20,000 tons. And it's starting to put some sort of detail on just how much physical silver is in China. I know they obviously have reserves that are a matter of national security, and therefore it's not freely available as to what tonnage they actually hold. But I suspect they hold an awful lot more than is perceived to be the case, even based on official data. And therefore, there's always this inevitability, from my perspective, that eventually the people in China would start to buy silver in significant quantities, as they have been buying gold, as we all know, for a considerable period of time. And I think that is an interesting shift because it comes back to this point. What really starts to change prices in the West is draining the West of physical gold and silver. And there's no doubt, particularly in recent years, there's been huge amounts of silver heading east to not just China, but India is another obvious example of that.
So what I find interesting, Paul, is that, and I wrote a post about this recently, is that India seems to be a lot more on board with China and Russia recently, especially after Donald Trump said that he's going to slap huge tariffs on India and the rug pull on the H-1B situation for like future H-1B applicants, right? So I think now India is more in tune with the rest of the BRICS Plus. And one thing, like you said, China has a lot of silver, but one thing that India has a lot of is physical silver, just like a lot of the other global South countries. And I remember also talking about this on your show before. I explained to your audience that in the past, China may not necessarily want the price of silver to go up too quickly because, China is a manufacturer factory for the entire world. And China, when China manufactures stuff like EV, like solar uh, panels, etc., it needs to use a lot of silver. So therefore, it's just my belief, and I said it on your show before, that China probably worked with um, Western bullion banks like JP Morgan and Goldman Sachs to suppress the price of silver. Now, now that Donald Trump is decoupling with China, and China got to switch gears to work really closely with the global South countries like Russia, India, Venezuela, etc. What China got to do, and I wrote it in this one tweet, is to provide a system where all these global South countries can thrive. And I believe you talked a lot about that on your X account and also in your videos in the past. And the way I see China doing that is number one, China, as we talked about this before, is setting up a lot of SGE, Shanghai Gold Exchange, gold vaults all over at, global South partner locations. That's the plan. The first one is being set up in Hong Kong, is already done in June. And Hong Kong is planning to have 2,000 metric tons of gold at that location within the next 3 years. So your audience may ask, what is that gold going to be for? And I explained in many occasions that that gold in Hong Kong is going to be for international trade within the BRICS system. So that's going to be used for stuff like interbank repo facilities or trade repo, longer term repo between international suppliers within the BRICS and the buyers for liquidity. Now, that's only one piece though, because that solves the liquidity and the collateral problem within the BRICS. So that they no longer need to solely rely on US treasuries and US dollars, right?
Yeah.
But China also has to guarantee the rest of these BRICS members that it can at least get close to the West in terms of technological advancement, EV, AI, and data centers, etc. And China, I think you reported it on the X account, has in the last year accomplished a lot of those already. For example, in the semiconductor sector, China, I believe, is very close at catching up with the West in terms of its ability to manufacture these ever smaller semiconductors. Now, this is like the CEO of NVIDIA saying, it's not me. Okay, so that's one thing. Like if China is able to provide this tech, that means if the BRICS Plus and the Global South decouples with the West, they won't be kicked back to the Stone Age because China is the tech. And then the third thing that I proposed in my post is that China has to allow the price of silver to rise. Whereas in the past, like I said, it colluded with guys like JP Morgan to suppress the price of silver. Now that China is trying to provide an alternative to the West, it has to allow its trading partners in the global south who exports a lot of silver, like South America, to make money, okay? A fair amount of money from their excavation or mining of physical silver. So those are the 3 points that I propose, and I really think that that is what's happening right now. That's why we're seeing the explosion in prices for gold and silver because there's a tectonic shift that is going on, and it's just what I just told your audience.
Yes, and I would agree with that. I mean, I've said pretty much the same things for quite a long time in different ways myself, and I think we are at that point where it's in China's and the global South interest to let the price or for it to achieve price discovery. And I think it also ties in with the fact that there is increasingly less tonnage available in the West, and that is for both gold and silver, and therefore that will put additional strain on those markets to what I would term behave normally and not have price suppression. And I do agree, I think silver price was suppressed in collusion with the Chinese. I've thought that was the case for a long time, but there comes a point when it is no longer beneficial for China to try and attempt to do that, not least because the drainage on the West in silver terms is enormous. And also, yes, because it's beneficial for global South countries who sell silver to maximize profit. And also, of course, China has an interest in those, in not all of them, but a fair percentage of those mines as in operational terms. So it's beneficial for them, also to them to be able to sell that silver to other parts of the world and to benefit financially as well. So yeah, it is part of this big shift and absolutely critically a realization for global South countries. They have to get out of Western financial system. They have to get out of the dollar, out of US treasuries, out of dollar denominated debt, because one of the things that was hugely beneficial as an example of this to China in 2008 was because its financial system was insulated pretty much from the West. That's why when 2008 happened, it didn't affect China to any extent whatsoever. And it was purely because their financial system was effectively siloed from the risks that the West posed. And for global South countries, of course, traditionally the dollar has been and US Treasuries has been the mechanism as a reserve asset. Well, that has to change rapidly. So everything you say on that basis makes complete sense.
Yes, and I think we are now at the point of no return, Paul. I mean, look at what's happening to SLV. The cost of borrowing SLV, the ETF for silver in the West, listed in the US, the cost of borrowing SLV shares right now exceeded 11%. This is just happened today. And for a number of days, there were actually zero shares available for borrow. Isn't that crazy? Now, in the past, as you probably know, Paul, and you talked about it on your account as well, whenever these bullion banks get in trouble, what do? They go and raid the SLV silver piggy bank. They would borrow shares to redeem for physical silver so that they can deliver it to wherever in the system that needs the physical silver. But this time, it seems like, Paul, and me and you both have been predicting this for years. Everybody want the physical silver and not the paper. That's what's happening right now.
Yeah, absolutely. And that's the big Achilles heel for Western paper markets was when you suddenly reach a tipping point where at one point, because demand for physical wasn't that great, they could get away with what they were doing. But as soon as there was huge demand for physical, or you have that tipping point, then everything changes, and then all of a sudden they're not in a position anymore to be able to do all the things they'd done previously, and the market then has to start behaving on the basis of true price discovery. What I would say is, I mean, I'm not interested. People always ask me what's going to happen with prices, and frankly, I don't get involved in that. It's not what I'm interested in per se, but because I don't think it's very helpful to talk on that basis. But we are in the process, for me, of achieving true price discovery between gold and silver, and particularly the gold silver ratio. I think it's 82 or something to 1. That has to be significantly less than it is now. And in time, I think true price discovery will be achieved. And that's irrespective of all the other developments we're seeing in gold and in silver. And silver, is, of course, should never be underestimated how significant it is as an industrial metal, but increasingly a monetary metal, but particularly for retail, not for sovereign nations. For sovereign nations, the demand is for industrial purposes, and of course, that's why Russia has a strategic reserve of silver as well, which don't think anybody has a clue how much silver they've got, but I wouldn't be surprised if it's pretty significant as well.
And I agree with you, Paul. I actually recently posted today that if there's even a whisper from any of the Global South members saying that they want to use physical silver as a international trade collateral or some form of monetary anchor, the USD price of silver is going to shoot somewhere beyond the moon to to outer space if that happens.
Yeah, I think that
There you
would
have it.
absolutely be the case for sure.
Yeah, so I think in my opinion, $50 silver is just the beginning. It's not even really probably not going to be the next equilibrium. It's probably going to be higher than that in terms of the USD silver price.
Well, the thing is, ultimately, it's an industrial metal that is being consumed rapidly. And therefore, there comes a point where how much physical silver will be present in the world. And I'm not saying it's all going to be exhausted in the next 6 months, year, or anything, but it's a diminishing return. And of course, there will come a point when recycling will suddenly take on a whole new dimension. And okay, recycling techniques are improving, but equally, I think the price would have to be at a certain level to reflect why there would have to be far more significant recycling of silver, and therefore to make it profitable to do so, the price would have to be north of where it is now. And as I say, I'm not getting involved in where that might end up being, but that's another consideration because it does get consumed very, very rapidly. And okay, there might be more physical silver deposits in the world. There might even be some in Russia somewhere, given the enormous land base and untapped resources it has there, or anywhere else in the world for that matter. But it's pretty finite as things stand, and that is a consideration for what also happens to the silver price.
Yep. So I guess we shall see what happens. I mean, there's a theory out there right now, hinted by some of these bullion banks, saying that um, next week China might help the LBMA with providing them with some physical silver liquidity. Now, I don't know. It's possible that China is going to use that as a chip on the bargaining table with Donald Trump. It's possible. But in the big scheme of things, I just don't see why China would do that in this juncture. But we'll find out next week.
Yeah, it's true. I mean, I would tend to agree. I mean,
Yeah.
China holds a lot of cards in terms of leverage, and there is no doubt there's a lot of rumors going around at the moment that about China pledging huge sums of money to invest in the United States, and that would be caveated on a lot of leverage. And they're not just going to give them money and say, here you go, do what you like with it. Absolutely not. So it might be part of that, absolutely the case. So I guess it's worth asking what your perspective is in maybe a bit more detail as to what is going on in the West in terms of physical gold and silver, or anything you think's worth sharing with the audience that would be of interest to them.
Paul, I think what's happening at the LBMA, like what's happening right now, and everybody's talking about it, is that there's backwardation with this Western silver market right now. What that means is that the spot price for physical silver is actually a little bit higher than the futures price, like the paper futures price. And my, interpretation of this, based on my observation, is that what is most likely happening right now is that the LBMA this time around is telling everybody that they are guaranteeing the spot delivery of physical silver. So what that means is that if you want your silver now for physical, they still have it and they'll give it to you. They won't do that T plus 60, T plus 90 stats. They will give you the silver if you need it. But if you buy a futures contract or a forward contract at in London, there's no guarantees. So that's why the spot price is higher than the futures price, and you have backwardation. That's my interpretation of that. And I think it's happening to silver in particular because silver, like you said, Paul, is an industrial metal. So you can't have industries like, the guys who make the semiconductors or the servers for AI. They can't be sitting around, waiting around for the silver. They need the silver. So they won't accept the T plus 60, T plus 90. Therefore, I think, what we're seeing now is happening because of that.
Yeah, absolutely. And it makes, and that would also backs up the idea that there might be some deal between the Chinese and the LBMA. But I mean, it's if indeed that is the case, then it's going to be again with a significant caveats applied to the Chinese willing to do that. And of course, it remains to be seen if that's the case. But I think in general, there is no doubt that there are significant strains inside the Western silver and gold markets now, as we haven't seen in an extremely long time. And arguably, that is only going to get significantly worse as time goes by. Now, of course, the argument is with silver in the West is clearly there is going to be uh, increased demand from the United States, who set up some kind of strategic reserve for silver. It's not clear exactly what that means, but they're finally understanding why silver's such an important metal, given okay, it's a big if they want to reindustrialize, etc., etc. That's a huge separate subject all of itself, but that will also add to pressure. And what is your feeling with regards to the sort of long-term future of the COMEX and the LBMA. I've always made the point with all Western institutions, they have to reform or die. That includes NATO, that includes the IMF, etc. And I think it's the same for COMEX and LBMA. They can have a future, but they're going to have to radically change how they operate in the future. What's your thoughts on that?
So that's a very good question, Paul. I think they have to change, and I think eventually the LBMA and COMEX will merge into one entity. It's already beginning to happen. I mean, with Donald Trump, his negotiation with Sweden, the Swedes are, you know, promising Donald Trump that they will move the gold and silver smelting facilities, some of them, or like a satellite wing, etc., to New York. Okay. So then you have the actual manufacturing or smelting supply chain in New York, and that will bring all the suppliers to New York. So that will essentially kind of like, in my opinion, leave LBMA holding the bag with nothing, a bag with nothing. So I think I think that is what is going to happen. Okay, and another thing, Paul, I also think is going to happen is that like you said, China may have a backroom deal with Donald Trump with the U.S. in terms of providing physical silver to the LBMA. Well, in my opinion, even if they do that, a couple hundred or a couple thousand metric tons of physical silver, that's not going to do much good because you know um, whatever the demand is right now, it's going to supersede that because silver is breaking 50. Once it breaks 50, I can see the demand just explode higher, which means that whatever China is going to provide to the LBMA is only going to last you can probably count it in terms of months. That's it.
Yeah, I would agree. I don't think that would last particularly long. And also, there's sort of obviously satisfying existing obligations anyway in that regard. So it could last even considerably less time. Now, it's not a solution. It might be a band-aid to get the LBMA through a bit of a headache on a very short-term basis, but then there's the long-term implications. But I think given the nature of what China's doing with the gold markets, from my perspective, they're making a real clear stake for saying we want to be the premier gold global market in the world going forwards. That's not to the detriment of any other country, and I'm not saying they're strangling what they're doing in Dubai or Singapore or anywhere else for that matter. But China's making its position in recent weeks and months very, very clear. And they've always had a desire for pricing commodities in the yuan. And there's obviously issues currently between China and BHP with iron ore in Australia on that very basis. So I think increasingly China is going to say, well, we want to take maybe a dominant position, is the wrong word, but a major position. And that therefore is going to obviously have ramifications for the West and Western markets like the COMEX and the LBMA simply on the basis that the global South countries are going to utilize China's gold market, as you say, with BRICS, etc. So that will then become the biggest market in the world by a mile, or even 100,000 miles. And therefore, that has ramifications for the West as well in that regard. And therefore, you would think there would have to be some uh, relationship for the West to survive. And otherwise, I just couldn't see how they could have markets that are with sufficient liquidity to actually continue to operate on that basis. So in the end, there will have to be some agreement reached or some relationship between China and the Western markets, including, of course, the ongoing relationship they have with Switzerland. Otherwise, the West, I think, will just disappear without trace with regards to gold and silver markets.
So I just want to say that I spoke too quickly, and I made a mistake. It's Switzerland, not Sweden. Okay,
No,
so
everyone knows,
so
don't worry.
Switzerland, it's okay. So Switzerland, that do the smelting of gold and silver right now for the LBMA and also for the US. But what is interesting there, Paul, is that Switzerland also makes what? Rolex, Omega, Patek Philippe, all the luxury watches. That is actually, their biggest industry, their high margin industry that employs the most people, not the smelting. The smelting stuff is low end, as you can imagine. There's how much technology is there to smelt and refine gold and silver. So I think the Swiss, they are ready to give up that business, or at least a big part of it, to New York. And I think that's going to happen. And once that happens, like I said just now, earlier, then the LBMA will lose even that geographic proximity to the smelters, because right now they're both in Europe, right? Well, the LBMA is in London, but is close to Switzerland versus New York to Switzerland. But if the Swiss move that smelting to New York, then it's right there, right beside the COMEX.
Yeah, and what's interesting as well is, from what I understand, is that the Chinese are going to end up putting one of these vaults in Switzerland. So that would further squeeze the UK out of the equation. If particularly the market does really start to grow and develop in the US, I think for me that's a bit debatable at this point in time. But if it does, and China starts to put a vault in Switzerland for because that's all part of international trade, then you could see the LBMA being squeezed very, very badly from their perspective. So that might entirely back up exactly what you're saying. Now, for me, the issue of the US and gold's an interesting subject because the US is desperate, no matter what happens, for the world to still regard the dollar as a world reserve currency. Okay, I think that's just a bit futile and largely becoming irrelevant, but that's their perspective. Now, there's a lot of discussion, and obviously Besson's denied it, but that doesn't mean anything that the US will reprice gold. Now, for me, the problem with the US repricing gold is first, does it even have the gold? And that's debatable. But second, if they were to reprice gold, for argument's sake, to $10,000 an ounce, that would be telling the world the dollar was no longer a world reserve currency. And so there's a bit of a contradiction there, and I'd be interested to know what your perspective is on all that.
So I think they're going to audit it because Judy Shelton just did an interview with Golden Telegraph, and she laid out the plan, and auditing is part of it. But the way they're going to audit it, I think it's going to be similar to what happened in the 1950s. They're just going to probably randomly pick a couple of vows, do a dog and pony show, audit that, and then you know how all the Western countries are. They're going to say, "Good for you guys. We're going to take that as a A++ audit." That's what's going to happen. So the rest of the bricks, you guys can take look these results, and you either believe it or you don't. I think that's probably what's going to happen. Now, in terms of the other question, you said if it gets to 10,000, you do a market-to-market revaluation. Is that likely? Because they might lose the world reserve currency status. Well, Paul, If we get to $10,000, they already lost the world reserve currency number one world reserve currency status because gold at that point would have probably taken, humongous market share from central bank holdings in terms of percentage of gold versus US dollars. Right now, I don't know if you know, gold is already at the precipice of surpassing the US dollars in terms of, being the number one reserve asset that all these central banks hold, according to the Financial Times of London. So by the time we get to 10,000, gold is probably what, like 30% more than US dollars in terms of global central banks holdings. So I think, in my opinion, at that point, the smartest thing that Donald Trump can do is ride along and do the revaluation and pocket something like 3-4 trillion US dollars, no strings attached from the Federal Reserve, using that gold certificate scheme that I explained to your audience in the past. And I know people say, well, the US has 27, $28 trillion in debt. That's not going to help much, $3-4 trillion. But wait a minute, okay? They're going to take that and surface the long end, like the long duration US Treasury bonds, which is at around, let's just say, 9-10 trillion dollars at that stage. So if you have around $4 trillion, that takes care of 40% of that. That will give them time to kick the can down the road for a couple more years to do whatever the heck they want to do. That's the way I see it.
Yeah, of course they can do that, but the problem is that most of the world just won't believe it. And so we're back to the problem the US has had in recent years, which is why the dollar's been rejected globally, is because no one trusts the US anymore. And I think the problem the US will face is that, yeah, they could certainly do this or potentially do it with the ramifications that the dollar's no longer a world reserve currency, which is they can't weaponize that anymore. That's a huge problem for them. But anyway, setting that aside, I think the world's going to go, sorry, we don't, well, the global south will go, we don't believe you've got gold. We don't believe until we see an independent audit of all of it. Therefore, our rejection of the dollar will continue. So then it becomes back to the point, who's going to buy the US debt in the future? And that's, is it, can't have a situation where the Fed keeps buying it. So I think they can potentially do this, but I don't think the outcome is certain as to what that will mean. And I just don't believe countries like China and others will say, yes, we accept you have 8,132 tons of gold. We want to see a total independent audit of everything and to verify that every single bar is gold, not tungsten, etc., etc. Or, someone else actually owns one bar. Well, 10 different entities own one bar. I think that's the problem. If the US had been a trustworthy custodian of the dollar, then things would be very different. But the whole reason the dollar's in the mess it's in is because the world's rejecting it because no one trusts the United States anymore.
Well, Paul, most likely they'll do it. It's just free money. Why not? They can do it multiple times. They did it twice in the 1970s. Nixon did it twice. I'm talking about the revaluation of US Treasury gold. So every time they do it, they pocket more money. They pocket the difference. So I think they're going to do it, and they would be dumb not to do it. Whether or not the global south accepts it, what's going to happen, Paul, is they're going to be two parallel systems, like you described on your X China X account, and also on your YouTube channel for the last couple of years. There's going to be the global south system with physical gold as international trade collateral, and also central bank reserve assets. And then you have the US dollar and the US treasuries as the reserve asset and trade collateral for the West. And I'm not saying that, I just want to clarify this. I'm not saying that the global South is going to stop using US dollars and US treasuries cold turkey. It's two parallel systems. So unless there's going to be a global, global thermonuclear war that just wipes everything off the board, I think it's going to be two parallel systems side by side, and whatever people trust, that system is going to thrive. And the system that people do not trust is slowly going to be withered away like dust. That's it.
Yeah, I would absolutely, well, I'd absolutely agree with that 100%. That's kind of where I was going with this and alluding to the fact that that is the problem. But yes, the US will have to do something on try something because it's absolutely desperate as things stand to do something, and which hence why it's clearly going around the world with a begging bowl, including saying to South Korea, give us 350 billion in cash. That's the biggest indication that the United States is in serious, serious trouble if it's going around making those demands. And that's simply on the basis no one wants to buy US debt anymore. And there comes a point when you can't just keep printing because the consequences are, increasingly catastrophic for the credibility of the dollar. So I think the other question I would have is there any other developments that you are aware of or you'd like to share with regards to what China's doing with respect to, well, maybe gold and silver markets?
Well, just something new that I heard from a trusted source that um, is basically telling me something that is happening behind the scenes with one of these big gold and silver distributor retailers in globally, let's just say, is telling him that um, there are big entities that are buying physical gold and silver from its inventory. So therefore, whatever that is available for the retail market is going to be squeezed even further. So I don't want to name the name of that company, but I think people will figure it out. It's all over the news. So whatever people see right now in terms of gold and silver scarcity is simply going to get worse, physical wise.
Yeah, absolutely. And this is, I mean, really, when we think about gold and silver and gold, I think is, just I'm not diminishing silver in any way, shape, or form, but logically, one thing I would think by now, if we'd gone back a few years ago and said, well, in 2025, gold will reach $4,000 an ounce, I would have expected far more institutional interest in the West and high net worth interest. There is some, but it's because of the opaque markets I'm aware of, but it's pretty muted still. There's increasingly noise, though, coming out of the West about, well, people are seeing the gold as a reserve asset. There's lack of confidence in the dollar US Treasury complex. And there's also claims of institutions who've traditionally not been long gold are now going long gold. So I think the question is, when do we get that tipping point also in the West? And that's where the leverage for China comes in, because when the West wants it, China can sit there and go, well, we're sat on massive amounts of gold and silver, and we're in a position to be able to leverage that in the marketplace. And it will, I think, in the West, there will come a point when there will be people breaking down doors to get in. The question is, when do they? And at that point, I think the markets will get extremely interesting because we haven't seen that in the West uh, for a very, very long time. And therefore, I think when that does inevitably happen, then I think then the market will get extremely interesting in price terms as well, because I do think for a while now, China is really indirectly being the one that's been shifting the price in the West, and directly in some ways with regards to the silver, for example. So it'll be interesting to see what happens with regards to when Western institutions, high net worth people really start piling in, and at some point, and inevitably many of them will do it far too late, but it'll be interesting what happens then and where they can source that metal. And that might then, of course, cause more problems in paper markets where even demand for physical delivery will grow even more.
Yep. Um, you know what's interesting, Paul? Even with the amount of liquidity that is in the system right now, I just saw news that the IMF is warning that there's a potential liquidity crisis in the $9.6 trillion FX market. So I think that just popped out of nowhere. Can you believe that? Just everywhere. The system is literally pulling itself apart in every single weak link possible. That's what we see.
Yeah, absolutely. Well, yes, and that ties. I mean, I've discussed it on my own podcast, but also on YouTube. I think, what was it, maybe 6, 8 weeks ago, I discussed why liquidity was a huge problem in the West, and because there was a number of things that, for me, it's more obvious because I worked in the banking sector. I see things, I observe things, and for me, there was clear indications of liquidity issues. And you're absolutely right. The IMF comes out and makes that statement. That's extremely telling that there are structural problems, and with those kind of structural problems, things can change on the proverbial sixpence very, very rapidly. And that's when you suddenly could have a situation in the future where there's a stampede to get hold of gold and therefore by extension silver. Because I think when there is an inability to get hold of gold, then I think you're likely to see people who traditionally wouldn't have bought silver will then be trying to buy silver. And then it gets extremely interesting what happens with regards to the markets in the West.
Paul, we're gonna find out, if the SRF, the Standard Repo Facility, and the swap lines for international banks, we're gonna find out if that's gonna work the next time there's a US dollar liquidity crunch. Because that's what those things were set up for. We're gonna find out one way or the other, I guess, in the next 12 months. If,
Yes, and
the IMF is
clearly
correct.
the argument is they're going to be grossly insufficient to meet the demand and the problems, because we've had this major problem which culminated in 2008, and here we are 17 years later when they've done nothing but make the problem progressively worse and worse. There comes a point when you have that, and therefore if that doesn't resolve the problem, which it won't, it comes back to me then the question of, when does the Fed step in and just prints like money like you just would not believe? And then what's that signal to the market? Well, the signal to the market then is, the dollar as a fiat currency, for never mind a world reserve currency, just is basically worthless. So, and then who knows what the ramifications that will be. Okay, there are going to be situations where they'll try and step in, intervene, do all manner of things, but the market will eventually have to accept reality rather than pretending, as it has done for 17 years, that everything was fixed and there are no problems.
Well, I guess I'm going to leave you with one sentence. We live in interesting times. So we shall see what happens. That's
Well,
it.
absolutely, but it's something, for people like you and I that we've been aware of it for a very long time, and aware of the reality of what was going to unfold. And now I think increasingly it's getting to the point where more and more people are understanding that. I mean, and the most important thing is because with all due respect, retail is only a drop in the gallon bucket, so to speak. But I do think we're at the point very soon when high net worth individuals, etc., and institutions are just going to finally have to say and throw the towel in and accept that the post 2008 experiment was a total failure, as it is, and they have to position themselves accordingly. And good luck in them achieving those objectives, because for me, they're already too late now, and I don't see how they're going to source metal as easy as I think some of them think they're going to be able to do that. And I think for me, that's sort of my closing comment in that regard.
Okay, well, thank you very much for inviting me on your show again, Paul. It was a
Oh,
pleasure.
it's a real pleasure as well. I always like your insights, obviously, in everything you discuss. It's always refreshing to get some other people to have a intelligent, rounded perspective on what's going on. And you always provide that, and it's objective and it's sensible and you know, it's rational, and that is a rarity. So I really appreciate your time as well, and thanks for coming on again, and we will catch up again in the future.
Thank you, Paul.
So with that, I'll say thank you to everyone who continues to subscribe to this channel. Thanks for all your support. Please like, share, subscribe. We're trying to grow the channel. I think we've gone through 18,000 subscribers, which we're very pleased about because they're all real subscribers, not fake ones. And we just trying to grow the channel and spread the word. So thank you very much. And with that, I'll say goodbye.